Hi, I'm Delo, and this is my investment analysis project. For this project, we have to analyze 5 companies from one industry, and I chose the commercial airline industry. So what is our mission? Our mission is to analyze the 5 companies, and in this case, we're evaluating the 5 largest commercial airline companies in the business right now. We will determine which of our 5 companies is the best of breed by analyzing their fundamentals and then conclude whether this top player is worth your investment. So our 5 airline companies are Delta Airlines, United Continental Holdings, Spirit Airlines, American Airlines, and China Eastern Airlines. But for this video, we're just going to refer to them as Delta, United, Spirit, American, and China East. So our metrics for short-term solvency, we'll use the current and quick ratio. For long-term solvency, we'll use the equity multiplier and the times interest earn ratio. For asset management, we'll use total asset turnover. For profitability, we'll use profit margin, return on assets, return on equity, and for our market value, we use price to earnings. So first we'll take a look at the current ratio, which is our current assets over our current liabilities. And if you see here, Spirit is averaging about a current ratio of 2 over the past 5 years, whereas all the rest of the companies, American, United, Delta, and China East, are all sitting at about a 1 moving down to almost 0.5. So according to these numbers, Spirit has about twice as much assets as they have current liabilities. And China East is bringing up the rear and last place. Our next is our quick ratio. So we take that current ratio, but we're subtracting inventory from the current assets. And if we look here, our Spirit Airlines is sitting between about a 1.6 and a 1.5 for the past 5 years. So in the previous slide where they were sitting at a 2, it shows us that they're not too invested in their inventory, that they actually have other assets that make them more liquid. After that, American, United, and Delta are all sitting at about a 0.8 to a 0.4, and it looks like they're slowly declining, and China East is bringing up the rear again. So now long-term solvency, we'll start with the equity multiplier. So here we're basically trying to figure out its total assets divided by total equity. So you can't hide leverage with this ratio. So as we see, American Airlines is the most levered organization out of them. So that's not necessarily a good thing unless they can turn it into profit margin. United looks like they're bringing their leverage down some in line with China East and Delta. And then Spirit is sitting at the bottom, so they are the least levered company. Next, the times interest earned analysis. Now, Spirit was actually coming up from about a 1500 level of a times interest earned analysis, but in order to be able to see the other parts of the graph, I had to basically cut off their 2013 and 2014 interests because they were paying so little. And apparently in the airline industry, that's something that's normal. If you're a new company, you can get loans and you can rent equipment from, say, Boeing, for example, really cheaply. But as you can see, they're kind of coming back to reality again, whereas Delta is at the top, so they pay the least amount for interest right now. Following, we got our total asset turnover. Spirit is sitting at the highest, so we're talking sales to total assets. And then they're kind of slowly tapering off. United, American, and Delta right smack dab in the middle again, and then China East bringing up the rear. So our profit margins are kind of all over the board. Now, if you look, American was actually net negative for 2013, and finally is actually up in 2014 until now. But it looks like a few have peaked, whereas somebody like Spirit staying pretty consistent with their profit margins. China East also staying consistent, but still very low numbers. I guess that's what you would expect from a Chinese company. It just looks like very slow growth. This is another chart to kind of give you a better idea of it. So China East with a small profit margin increase. American, United, and seem to just have peaked in 2015 and slowly coming off. Spirit has a consistent growth in profit margin that looks pretty good, and then Delta seems to be going backwards. So for our ROA, it's kind of a similar story. United, Delta, and American seem to have peaked in 2015. So Spirit's kind of coming down, and then China East still really low again. So right now, Spirit is the best at return on assets. And then our ROE, American coming down because they weren't profitable before. But currently, they have the highest ROE in 2017. And then, in this case, Spirit, United, and Delta are in the middle of the pack. China East still bringing up the rear. And price to earnings. Spirit, once again, highest price to earnings, so it's a little bit more expensive of a stock, but they also have more growth where it makes sense. Everybody else is basically in 2017 smack dab at a 10, so under a 15, so decently priced. And then our forecast for price to earnings, we got China East is actually high, although I think their forecast is a bit high. Spirit, second place, I think they should actually be in first place. And then the last three bringing up the rear around 5 to 10%. And that's it.